The FAANG stocks have been losing steam now for a very long time. We can go back to the middle of 2018 to see where the trouble started. But here's what's interesting is the Nasdaq 100, which is composed of 100 top Nasdaq companies, has all the FAANG stocks in it. And the FAANG stocks are the really large capitalization companies. So the NASDAQ 100 has been pushing up to new highs. So today, what we're going to do is we're going to look at FAANG, we're going to look at the NASDAQ, we're going to see if we can identify the rotation that's taking place and find the new leadership, and also evaluate the condition of the old leadership. With that, welcome to Power Charting. I'm Bruce Fraser, your host. So happy that you're here. First thing we're going to do is look at the FDN. We've looked at this a lot, so we're not going to spend much time on it. And you can see here that the trouble really started. Now, the FDN, which is the Internet Index Fund, has all of the FAANG in it, but I don't believe that Apple is in it any longer. So at the end of June, I want you to see these dates here. These two blog posts really was the start of our discussion about FAANG. You can see here that this is where the trouble started, and wow, was that great work or what? Because we saw an overbought condition, climactic action, and then subsequently a very large automatic reaction, which set up a range-bound condition. And that was 15, 16 months ago. So we're in a range-bound condition. We evaluated this area here for a distribution and a drop. We got it. Now let's evaluate this area here. You have seen this chart before, and what I'd like to focus on is the point and figure chart. So let's just zoom into that. You can see here that using a standard scaling one box reversal, so this is swing trading counts that we're looking at, that this count of 25 columns gives us an objective of 100 to 90 from a count line of 140. And so that's a pretty stiff decline that we're looking at here. And this would take us down to the area of the prior low, which came in at about 106, 107. So this could take us to a minor new low, which would be a sign of weakness. Does this spell doom for the NASDAQ 100? Well, we're going to answer that question if I can get myself in gear and go a little faster. So here, this chart is up to date through November 7th, midday. And you can see here the original distribution that we looked at a long, long time ago. Here's that late July period. This is where late June period where we first looked at FAANG getting into trouble. Saw a classic distribution. We did point and figure counts on this. They worked out very, very well. Throw under at the bottom, oversold condition, produced a really good rally, which only got back up to the prior highs. But look at this. Now we have another distribution. Well, this is larger than the prior one, and it's possible that all of this together, this whole shebang here, could all be a very large distribution where we have climax here, automatic reaction down here, and then we are building distributional count as we go. The thing I want to point out here is this distributional structure that we're in. Notice this big bout of weakness here that took us to a minor sign of weakness, and then a rally of very poor quality, which took us marginally higher up to the 140 level, and then another big weak decline into a larger sign of weakness. And we call it this because it took out this key low, this key low, and then rallied back up. But look, this rally has arguably less lift in it than the prior one. And so this is looking pretty ominous for the FAANG stocks. So does that necessarily mean that the Nasdaq 100's in trouble? Well, let's see if we can't unbundle that question here as we go. Okay, so here's the actual Nasdaq 100. I showed this chart in a prior power charting episode. I know you watch them all, so I'm not going to belabor this, but you can see classic distribution. This was in the area of the low that we had prior to an important rally starting, and this we pointed out was a beautiful base, and that we were seeing higher lows throughout and over here also, and that we should have the potential to get a good rally going. So here is what in fact happened, is that we had the breakdown. This was the low, and then look at this beautiful rally that we've had, and up to new highs in the Nasdaq 100. And so we're asking the question, is there the potential for more to come? Does this necessarily mean the end for the Nasdaq? Well, look at this here. This is a little interesting. Look at these gaps that come near the end of the moves. So now I'm just doing my kind of intraday trading cap on right now, and there's a gap up, a surge higher here, but this could be climactic in a sort of a constricting 5-wave structure potentially. Maybe it's even bigger, but it's getting tighter and tighter. And so this looks a little bit climactic, like a reaction here would be entirely possible. Okay, so here is the point figure counts that we did before. And so here we have a count here and a count here. This count took us into this area, 75.36, 75.36, they confirmed each other. Well, we got down to about 74.70-ish. And so went slightly through the low count before the rally started. And then onward we went. So here are some new counts for the Nasdaq 100. These are stepping stone reaccumulation counts. So this is in the uptrend that we just looked at on the prior vertical chart. And you can see here, this is a beautiful, this is 15-minute data, one box reversal. So these are swing trading in the short term intraday. And you can see a count here that takes us up to 82.81, 83.80. Well, we are now just one box away from the 82.81 count. And here, this smaller reaccumulation takes us up into the area that we're in now, which is 82.31 up to 83.21. So we are in the window of fulfilling at least these trading counts. Does that mean that there's big trouble ahead for the Nasdaq? Not at all. But it does mean that we may need time to build another reaccumulation and or some kind of a cyclic reversal like we had before. And so we want to just keep our tape reading cap on and pay attention to the ebbs and flows here. Okay, so at that point, we're going to stop here and move on to looking at the triple Qs, looking at the individual FAANG stocks. And so let's have a look here initially at the triple Q. I have to use a different pen for this, so just give me a second to do this. Beautiful. Okay. So, hey, this is a live show, so to speak. So anyway, so here is the area that we just evaluated. Here's that larger base. Here's the smaller base. These are the two reaccumulation structures. We can see them in the daily data, but we went zoomed in to do the point and figure counting. So this is pretty attractive. Nice uptrend will look. So here's an important peak, and we have thrust up above that. Here's another one. We've gone above that. And so we have an upthrusting action. Now what we want to see is if there is some kind of a pause ahead of us here, we would like to see this area right here not pull back into the prior structure. And so some kind of a gentle pause called a backup, spread narrows, volume dries up would be great. One thing that's has us concluding that this may be near completion besides our point and figure counts is look at how the volume is drying up as prices are rallying. I'd also like to point out that the triple Qs continue to be leadership, even though I'm going to show you in a minute that the FAANG stocks are just not helping out much here. Okay, so let's keep going. Use our time wisely. I want to just show you Apple here. Apple is the class of the entire FAANG list. It's acting great. It's been a wonderful stock. It's had a phenomenal year in 2019. You can see it started the year on the low and it's just been marching up and up and up. So we're not going to spend a lot of time on Apple because it really is sort of in a category of its own. But here we go. Let's start with Facebook. So here is a weekly chart. And you can see here that I've attempted to label what is this very large structure. Is it possible that all of this is distribution? Well, what we're going to focus on really is we're going to focus on this area here, which looks to be localized distribution. And that doesn't mean that it's not potent and large, but we're going to have a look at that and see if there isn't something that we can derive from looking at Facebook on the daily. So let's go there now. Okay, so here you can see this local area that we just highlighted. Pretty good rally, climactic structure, acceleration, stopping action, stops the uptrend, range bound market. Look at the thing that tells us that this is going to be range bound, quite a dramatic buying climax, but then a very stiff automatic reaction. These are the outer bounds of our trading area, and look how we have stayed there. Well, notice what's happening now. If we look at the volume, we can see that there is a climactic surge of volume that occurred right into the resistance area. This climactic surge is like the one that came at the buying climax. That is, in my estimation, large composite operator selling activity. So they are selling in this area. They are the only ones that can command this kind of volume. This is very deft quality selling that's taking place at a very important strategic point in the chart. Now look what happened after that. Tempted to pull back, and then it tested again, rallied up slightly, and went up into a test, and now it's starting to turn back down while the market is strong and going up. So this is an interesting change of character here that we need to keep an eye on. Also, notice that the relative strength peaked out at the upthrust on the daily, and you can see the downtrending action as we go through this period from the upthrust to the last point of supply. Now, what will confirm all this would be weakness that would go down towards support. And so this is what we'll be watching for with Facebook. Okay, and then the last thing is here's a point and figure chart. You can see that there's a count here, substantial count. I would take from here to the high in this area. And so I'm going to leave you to do this on your own because we really don't have time for that today. But there is a count there for distribution. Okay, well, let's go to the next one, which would be Amazon. Okay, so here's a daily chart of Amazon. Let's see if we look at the weekly. Okay, so Amazon's an interesting case. Notice that Amazon has been range bound now really since the fourth quarter of 2018. Big buying climax, gigantic bout of weakness into the end of the fourth quarter. Amazon rallies with the market after that automatic reaction, goes up, tests the buying climax high, and then you can see the weakness really coming in. Now let's go down and look at the relative strength, because this is really kind of a key arbiter for us. And that is, here's the peak in relative strength in August, September of 2018. Notice that as Amazon pushes up to test at the buying climax high into that upthrust that we see there in June, July of 2019, relative strength does not confirm the high touch of Amazon price. It's making a lower high. And I labeled that a UNC. That's just an upside non-confirmation. So relative strength non-confirmation, sometimes they're subtle but important clues. Then look at what came after that upside non-confirmation. Now the relative strength is trending down, and something important has happened here, because we can see that the relative strength is now below a moving average that is starting to turn down. So this is in a confirmed underperformance situation. Also, see this big line here on the relative strength. Look how long Amazon has been a relative strength leader. It's been a relative strength leader for 1, 2, 3, 4+ years. Wow, impressive. So, not surprising that Amazon might be a little tired. Well, also notice how the market's going up. The Nasdaq 100 is pushing to new highs. Amazon is not doing that. Well, let's now turn to the daily. Got to keep track of time here. Okay, I got to go faster. You need to warn me about these things. So Amazon, look at the quality of the rally here and here, and look at the relative strength. Relative strength persistently down, down, down. So buying climax, automatic reaction. This is on the daily. So this is the kind of the same time period we just looked at with Facebook. Up thrust to a new high, fails with very high volume on the failure. So we can see a lot of red volume bars in the declining area here. This indicates to us that supply is present. And so now we can see that a rally of poor quality has taken it to another lower high. The market is trying to go to a new high here. Amazon is nowhere near it. And you can see that actually Amazon is down on an up day in the market. Okay, let's just keep pushing ahead. Okay, so the next one is, let's go to Netflix. Do weekly. So here we can see similar look. So here we have preliminary supply, buying climax, followed by a huge automatic reaction. This produces the outer bounds of the range. It's stayed in that range ever since. This all started mid-year 2018. And so we can see that this really was just a very important indication, was this climactic move up. And go back and read those blogs, because it'll help you to see these things for yourself in the charts, because imagine how important this is. Imagine if an institution was able to sell at the buying climax highs, Netflix, because Netflix is really one of the weaker FAANG stocks right now. So we have a secondary test after the automatic reaction, and then a minor sign of weakness. Relative strength, look here, look at how the relative strength ups, well, it's not an upside non-confirmation, it's all confirmed down now. Lower highs in Netflix price, lower highs in the relative strength, trend is down, the moving average is down. This is a confirmed downward trend in Netflix. Okay, let's rush along here. And here is the daily chart. So we've labeled this. Look at this initial rally in January of 2019, produces a buying climax with a few gaps, rushes up, then has a big stiff reaction. We automatically draw resistance and support lines. We have a secondary test twice and then an upthrust. And this all has the patina of distribution. And then look what happens after this upthrust. This is a cruel moment for many people. Looks like it's going to be a breakout, and then it turns down off of this and has a huge gap down to support through it to produce a sign of weakness. Then an LPSY, we always look for a last point of supply to follow a sign of weakness, and thereafter you can see it just fading away. So there's a rally of sorts here that is taking place, and this very well could be tradable. I'm wondering, I call this a stepping stone redistribution, SSRD. And so I'm wondering if this is unfinished redistribution, but this is be my warning here. Let's get the relative strength on here, is that notice that this area of resistance at 300, if there isn't an attempt to upthrust that fails, I'd really be on my toes for that, because that would be a real confirmation of redistribution. Okay, relative strength. We can see here this line, the relative strength during this whole period of a trading range where there's attempts to make new highs is all confirmed with relative strength lower highs. And so this tells us that Netflix, the steam is coming out of the performance here imperceptibly. And then all of a sudden, boom, down it goes. It's in a downtrend now. It's trying to get back above the daily relative strength. We'll see if that can happen. I think that there could be more trading range here, and then ultimately another attempt to go back down because the volume is way too high. All this volume that's coming in says supply, supply, supply. And so the composite operator is going to want to test that supply repeatedly. If they want to own the stock, they want to know that all the sellers are exhausted and out of it. Okay, so moving on, let's do Google. Google's one of the better ones, actually. So notice how Google has pushed up to resistance, preliminary supply, climax, secondary test, upthrust. So Google is up against its resistance area here. You can see automatic reaction here potentially, or maybe it's here. Excuse me. This appears to be in this area a sign of weakness. Goes up to the highs again. A lot of volume. Look at all the volume activity as the market goes down. I'd be careful with Google, but it is one of the better FAANG stocks at this time because it is flirting with new highs. But this is resistance. This is where the trouble can happen. So just be on your toes. Okay, we're going to go, oops. Yeah, so here is Google daily. And so you can just see this upthrust right here, a little bit of a climactic action as we pushed up. Thing we don't want to see is a big distribution bar that comes right back into the range. We'd like to see, even though there's a tail here today, we want to see Google just keep pushing up and going to new highs to confirm that its uptrend is sound. And so let's now turn our attention to we looked at the cues. We can see here this upthrusting action in the Q point and figure. If the cues were to come back down in, and it's right on this upthrust area, if it came back down in, this is where we would count distribution from across. I'm not expecting that. I'm bullish on the market. I think the market could pause here, but I'm expecting that the cues along with the S&P and the Dow and the other big indexes will consolidate and then keep going higher, but got to be on our toes. Okay, now we're going to switch gears again. So I'm going to pause. I'll be right back. We can see from looking at these FANG stocks that, except for Apple, that they are range bound and have not been contributing to outperformance since the middle of 2018. The relative strength is such that they're starting to really lose their steam. Institutions see that, and when they see that they're no longer contributing important upward performance and good trends, they start to not completely sell them, but they start to reduce their exposure to them. You know, typically it seems as though institutions take 6 months of this data of contrary conditions that these stocks are not helping them. I think the FANG stocks are doubly important because they are the biggest stocks for the most part in the Nasdaq 100, and so biggest market cap. So institutions are overweighted these stocks, and in fact they are in many cases still overweight these FANG stocks. The question that we want to ask in the few minutes that we have left is, where is the rotation occurring, confining our look into just the Nasdaq 100, because the Nasdaq 100 is going to new high prices. So something is taking the Nasdaq up while the FANG stocks are waning and slipping away. Apple is important because it is the biggest, like $1.1 trillion market cap. Apple is the most important FANG stock right now. As you can see here, look at this, 64.97% return in Apple in 2019 year to date. So Apple is the big contributor not only to the Nasdaq 100 because it's the largest cap name, but it's also the biggest and best FANG stock. And ironically is not, I don't believe in FDN. So anyway, now we have Facebook. Facebook is number 2 here. Look, it's number 20 on the list for performance. So it's number 2, and its returns 45.72 through today, or through the middle of today. Google is number 43. So you can see 100 stocks. These FANG stocks are really middling in terms of performance. Well, Google's up 27%, 27.47, and Amazon is up 19.82, which puts it at number 58. So there's a tremendous number of stocks that are outperforming these. Okay, we have about a minute left. So here's Netflix, 8.65%. And you have to get all the way down to number 88 in the list before you start to have negative returns. So the message here is that the Nasdaq 100 has broad quality participation across all of the different stocks, for the most part 88 of them, 87 of them, and that they are doing a wonderful job. So I'm just going to show you this list, study it on your own so that you can see that these stocks are doing a terrific job of creating performance in the portfolio. Here's the second third of the list. You can screen capture this and then find the final third. And I want to say, in the 15 seconds that are left, going to interview Stella Asoba this coming weekend. We are going to do she's going to do a lecture on power charting, on the relationship between Richard D. Wyckoff and Jesse Livermore. This is must attend. So a week from Friday, look for that lecture, that discussion. We're going to record it this weekend and make it available next Friday. And with that, I'm so glad you were here. Have a great week, and we'll see you next time.